Good morning, Reddit Nation. It is Friday, January 29th, 2021. Welcome to all my Boomer and Xer readers and, the four millennials. So let's talk about Reddit and AMC and GameStop and Robinhood and everybody else that is on the collective mind of investors everywhere today. So we're going to talk about all those new superstar traders that are out there. Don't you wish that you were one of them? Remember this? I put this up about 2 months ago. Said the stock market is delusional. People told me I was wrong. What do you think now? Different valuation measures are off the charts almost. Q ratio through the roof. Crestmont ratio is up there. The cyclical PE over 10 years. The Shiller ratio is way up there. And understand this, that's a 10-year measure. So when that gets really high in the present, it means the next 10 years might be a bit choppy. The Buffett measure, Buffett's nothing anymore. He doesn't know what he's talking about. But why is the market so high? I've talked about this over and over again. You have all sorts of option buying. This is a chart from a few months ago. Do you even want to see the new chart? So I'll give you something that's real new. That's margin. And that's way more important. Why? What was in the headline today? Why did Robinhood and Interactive Brokers and TD Ameritrade limit the trades that Robinhooders and other traders could make in GameStop and in AMC and some of the other heavily shorted names that they had spiked up 300 or 400%? Why were there limitations? Was it some grand conspiracy to hold millennials down? Of course it was. It's all about holding the millennials down. It's all about that. It's a grand conspiracy. Or maybe it's because the backing institution that holds those trades for a couple of days while they settle, forget the exact name of the institution, DTCC, Transaction Settlement, something or other corporation. They said to the brokerages, hey, these are really high-risk trades that you want us to hold on to for a couple days while they settle. How about you give us some more money just in case these millennials don't have the loot to cover the trades if these stocks suddenly drop? That's these guys. These guys are the middleman. So when a brokerage makes an exchange, a trade between them and the exchange, these guys get stuck with holding on to it while it settles. If there's a sudden change in price, they could be on hook for a bunch of loot. So they went to the brokerages and said, hey, we're going to increase your capital requirements. Robinhood went out and borrowed $1 billion. Maybe it's not a conspiracy. Maybe it's just when the markets get super volatile, risk is going up, and the financial institutions have to protect themselves. But no, that couldn't be it. It's a conspiracy. By the way, does anybody see an alligator in this picture? Or do you see any alligators in this picture? I don't know. I know people get offended when I call them the dumb money, the dumb retail little guy money. Well, history is history. When the big guys, the rich guys, the people who have money in a family office where the minimum deposit's $10 million or $100 million or $1 billion, and they're selling, but you have a whole bunch of small traders using margin and calls to bid up stock prices on heavily shorted instruments because they're simply overwhelming the system, and I'll explain that in a second. Do you think it's going to end well for the traders? Do you think it's going to end well for them? I bet it doesn't end well for most of them. And who it's really not going to end well for are the people who are like, oh, look, it went up 300%. It's going to keep going up, so I'm going to buy it. And then they don't look for a week, and GameStop drops 50% overnight. That could never happen, except yesterday. But now it's up, 50% again. It all makes perfect sense. Stocks have moved 5 or 10 or 20% for a long time. Why not just add a zero? Why not? Hey! It's the age of funny money. Ever since 2000 and about 3 or 4, all the deregulations after the Bush era and the tax cuts, culminating in a financial crisis that led to the Federal Reserve just printing money. And again, it's not really printing money. They're borrowing, technically, part of the borrowing machine, pushing interest rates down to nothing. For this entire century, we've been screwing, and normally I use a word that means the same thing but starts with the letter F, but I was scolded recently by a couple of people, so I don't want to say fucking at all on the air. We've been screwing with the financial system since about 2002. And I could go through all the different regulatory and tax changes that they did. We tried to bring those things back under Obama after the financial crisis, and everything got better. And then Donald Trump said, hey, no, let's go back to the George W. Bush era. Just print even more money, because what problem could it create? And I'm going to give you context for this one more time. And if it doesn't shake you to your foundation, what has really been going on for the last 20 years, and it began in the early, 40 years ago, but it really took off 20 years ago. If you can't wrap your head around what's going on, then it's just going to keep happening. And I completely understand the populist movements here, and we're going to talk about that a little bit because it's important. You have two visions of populism going on right now that are very opposed and could lead to some very bad places. What's going on in the market right now, the volatility that we're seeing, it's a little mini financial civil war. One side's been gaming the system because they got the rules written in a way that would allow them to game the system. And another group, millennials, are saying, you know what? We don't care. We're going to collude, which is illegal. It is illegal. What Reddit has fomented by having ringleaders who place their trades, and then they feed the ideas to other people, and then they implicitly agree to all buy the same thing. I mean, the posts are right there online. They're doing it. That is collusion. It is market manipulation. There's actually laws against it. But seeing as we allow high-frequency trading, which is basically legalized front-running of the market, and seeing as we don't really enforce insider information on Wall Street or in Congress, and seeing as the rich just keep getting richer, and the middle class keeps shrinking, and the bar to having a full life that's secure and happy, and with liberty and good health, life, liberty, happiness, the financial system making it difficult for people to have those things. Right now, 60 to 70% of America will never be able to retire. I'm going to show you a stat in a minute. Make you go, I wonder why that is. I wonder why this line keeps going up and to the right when it should be going down to the down and to the right. Why is this happening? And the narrative will be, well, just because that's what they want. And I'll use a farmer word when we get to that. So the dumb money thinks they're brilliant right now. And the smart money is down here going, I got really rich doing this stuff, and I don't think this is going to end well for those guys. So the stock market's going crazy right now. Starting to have a little correction this week. We'll see how that turns out. Let's just turn our senses to the economy. Labor force participation rate. Remember I mentioned about 2002-3-4? A bunch of regulations and tax laws changed. And labor force participation rate in the main group of people who should be working starts to fall. Pops up a little bit on the first batches of funny money, then crashes after the financial crisis. Finally starts to come back with a whole bunch more funny money, and now it falls off a cliff again. This used to be in the 90s, by the way, years ago. But who's working more? Yeah, the age 65 plus group. Why is this? Why are people who are supposed to be retiring working more? How come? Remember I mentioned that this has been going on for about 40 years? Hey, look, this is when we started changing all the laws and the regulatory systems. We've had 2 generations now, spanning 40 years, where it's become more difficult to be in the middle class. Fewer people can afford to retire. The healthcare system is still screwed up, taking more and more of our money, and now with the pandemic, even more of the money. People are dying because they can't get a doctor's appointment. People are dying because they have to go to the doctor because of coronavirus. Last March, I told you we have to be very careful on the way that we handle this and not allow it to become political. By May, I was telling you that the reopenings were going to screw up the whole thing and that we'd end up with a double dip recession and that 500,000 people would probably die. Is there anything that I said back then that isn't coming true right now? Anything. The only thing that I didn't anticipate is the millennials would come in with a vengeance and just use basic math skills. Remember I talk about how the millennials come in and they use the system in poker? They just play systematic poker. And they do all the right mathematical moves according to a chart. It's a little card, some boxes and stuff. If you have this hand in this situation, you make this play. And they were difficult for me to beat for about a year. They weren't beating me. I kept thinking to myself, they've got this system. What do we know about gambling systems? What usually happens to a gambling system? In fact, every gambling system ever invented, ever used by any degenerate anywhere, what happens to it? It fails. It fails. Why? Either the casino adjusts or the other players adjust. Keep that in the back of your head. So the economy has a massive problem. Since the financial crisis, debt accumulation in the United States has exceeded growth. About $18 trillion in debt, and this is up to about $19 trillion since I made this chart a few months ago. And the growth in the economy is only $7 trillion. So we paid $19 trillion to grow the economy by $7 trillion. There was a little period under Obama where they started to level out the debt and the growth kept going. And then we decided, hey, why don't we cut taxes on the rich? 85 to 90% of the tax cuts went to the 1%. And why don't we deregulate all sorts of industries that pollute, that the public has to pay for the cleanup? Let's make sure that minimum wage stays down at $7.50 or $7.35, whatever it is, because, it'll hurt business if they actually have to pay people. It's not like those people will go out and spend that money and help business. Actually, it is. Actually is. This has to get fixed. The only way to fix it, I'm telling you right now, the only way to fix it is to rebuild the world in a sustainable way. And you probably have to do a helicopter money drop that's so big that it defies the imagination at some level. I've told you between $15 and $20 trillion, they should print it today. Not borrow it, not create U.S. treasuries, just print 20 trillion $1 bills. Because why wouldn't you print ones? I mean, George Washington's on the one, or maybe some new 20s. Harriet Tubman's going to be on those. Why wouldn't you just print $20 trillion, fix the pension shortfalls across states and municipalities, and say, hey, we're bailing you out, but there's terms and conditions applied. You can't have pensions anymore. All the money goes into TIA CREF or something similar. Why is that important? Because it helps the capital markets, which we're going to need, and it takes off the hook a bunch of people who are bad at managing money from managing money. You just give people index funds. And if they want to go buy stocks with their Roth IRA, fine. Or the money that they save, fine. Because all those margin borrowing babies, eventually they lose. And we've heard the stories about somebody who borrowed on margin and didn't even know that you can lose more than you borrowed. And they get a bill. And most of them just declare bankruptcy. But every now and then somebody goes crazy and they jump out a window. But right here, this chart, if we don't start growing the economy more than we're growing debt, we're in very big trouble. I've always said that would happen around 2030. Some new studies are saying 2026 and 2027 and 2028. So a little bit nearer term than I thought. But it's the same thing with oil. The end of the oil age is happening spectacularly fast, and you still have all kinds of people denying it. What did GM just say this week? What did GM just say? And I told you Ford is going to say it too. They're going to go all EV. How are the oil companies going to pay off their debt? This is just an aside. There's an article on Bloomberg or Market Watch yesterday. The oil companies are talking about how they're going to spend their free cash flow because oil's in the 50s right now. Yeah, how about you pay off your goddamn debt? You know what they mentioned? More drilling, more dividends, and more share buybacks. If you're a bondholder in an oil company, you ought to be calling the board and saying, hey, we're going to sue the shit out of you if you don't pay off your debt. Because the company ain't going to be here in 30 years because nobody going to be using oil. So pay off your debt. Most of the oil companies in the United States, most, not a few, not some, not a slim majority, most, all except 5 or 6 or 7 maybe, are going to go bankrupt or do complete different businesses in the future. And yet, the crooked oil executives that I wrote a couple articles about a couple years ago and last year, the crooked oil executives, which is most of them, right? They heap negative externalities on the public in pollution that they don't clean up, right? They take the profits and they just push the mess over there and say, oh, let's put that in somebody else's room. It's like having a sibling and you keep your room clean, and when they take their clothes off, they throw them in your room. This has to get fixed. The only way to do it is with helicopter money. Can't be done any other way. Now, they might be able to avoid it for a few more years, but ultimately, the headwind of massive boomer retirements, all the boomers are going to be retired later this decade, and the generation behind the millennials being small, and the generation behind them probably going to be smaller, even though President Biden's going to let in 3 or 4 million immigrants and become citizens, It's not nearly enough. I've got a 92-year-old grandmother right now who saw World War II, grew up in the Great Depression, just beat COVID. How long do you think the boomers are going to live? There are going to be an awful lot of people living to be 100. When I was selling life insurance 25 years ago, I'm so old, I'm 50. I'm going to be 51 in 10 days, 8 days, 9 days. I don't know. Math is getting hard as I get older. How many boomers are going to live to be over 100? When I was selling life insurance, they had us do the projections to age 85 or 90. And I said, a lot of these people are going to live to be 100. Yeah, but we don't want to show we're not, no. It's just, we just use 90 or 85 to show the projections on the universal life insurance that they had. That was a big selling thing in the 90s. And the interest rates are higher. And I said, well, I'm going to do my projections out to age 100 based on minimum interest rates. Never even considered the mortality could change for the negative. What happened with those universal life insurance policies is that the mortality did change for the negative. Why? Because the assumptions used by the actuaries were lies. Not wrong. They're flat out lies. So all those universal life policies, I know some of you had them, where the interest rate dropped and the policy still survived, but then they made an adjustment to mortality. And you were like, well, wait a second, people are living longer. Why would there be a negative adjustment to mortality? Because they lied. Just like the oil executives lie. So, since the early 1980s, this chart is the one that I want you to really have on your mind when you think about this next thing we're going to talk about. Why people got so riled up. Why all those messages on Reddit. And why AOC and Ted Cruz are pounding the table. We got to look into this. We got to look into this. We got to look into this. Yeah, jackasses. Look into it. This is the growth of the debt to the United States since Ronald Reagan, since Ronnie Baby. This is the growth of the net worth of the top 1% of the people in America. Do you notice a correlation? Do you notice anything that goes, wait a second, maybe, no, I'm losing it. No, I can't see how everybody borrowing money could possibly just go to 1% of the people. Chart's got to be wrong. We live in a meritocracy. It's a level playing field. It's a free market. Nothing's manipulated. Use your farmer word. This has to be fixed. And the wealth, this is why Elizabeth Warren called for a wealth tax. And that's why the millennials think this. That's why. The boomers, the millennials think that the boomers, through their actions and their voting behavior and their complete lack of emotional control, and I'm just speaking as a millennial. I'm not a millennial. I'm just telling you what they think. Screwed them over. Thanks for the iPhones, but you screwed us. And that's where you get your Reddit moment. And then she's like, oh, I got to get on this. I'm going to do a Twitch thing last night. And I'm going to talk to Shamith and some other people. I haven't listened to it yet, but she's in way over her head. If the Democrats had any brains at all, they'd go recruit a billionaire to finance a normal person and get her the hell out of Congress. And then the Republicans should recruit a billionaire and go get this whiny sack of shit out of Congress too. This is the problem with our politics, the left extreme and the right extreme. And it caused this. As Scott Walker, the former governor of Wisconsin, famously said on the radio, because he didn't know, he was duped. He thought he was talking to a Koch brother. Said, yeah, this strategy of divide and conquer is really working. You pit the far left and far right against each other, and it drives the narratives, and the people in the middle, we just skim from all of them. That's what he meant. There you go. That is a Federal Reserve chart telling you. They're giving you the information telling you this is what's happening. And then we have these moments in the market where the Federal Reserve, of all people, are pouring money. It's not buckets of money. Think of it like a dam bursting. They're just letting the water go over the dam, draining the lake. Well, the lake's there for a reason. It helps create power and growth. But if you drain the lake over the dam, it trickles down and everybody should get wet. But as it turns out, we're going to change the regulations. Only the 1% can live in the lake at the bottom with their buckets. They're the ones that can fish in that river. Millennials got pissed off about that. They ganged up on those noble hedge fund people like Steve Cohen, who bought the Mets because he's got $14 billion that he skimmed out of the market. You know, a guy that was accused multiple times of insider trading. The modern day Gordon Gekko. And he's trying to redeem himself by putting a competitive team in New York with the Mets. I don't know. I went to a Catholic school for part of my career, and I seem to remember some story about a needle and going to heaven or something. and rich guys. Well, this guy's had it up to here. And Reddit's actually a very nice place for people to get information and exchange ideas. They would never have threads that start out as shit stock. So let's look at a couple charts. This is GameStop. GameStop is a company that I wrote about 3 or 4 years ago. And I said that if they change the company, it could be a big deal. It could really go up. And I talked to successive CEOs of that company. And I realized they were stupid, like dumb with a backwards D. So we bought it, sold it after it went up $1 or $2. And I wrote another article that said GameStop could go the way of Blockbuster if they don't change their model. And this is what they have to do. What they have to do is close almost all their stores, go almost entirely online, and just have maybe 100 stores around the world where they had gaming tournaments and big fields so that people could try virtual reality. To get in on the tournaments, you'd have to have a membership to GameStop. To use their virtual reality field, you'd have to have a membership to GameStop. And by wiping out all those stores and just having about 100 experiential stores around the world, you'd be sucking people in. And I went to New York about a year later, and I went to the Samsung store by the High Line. And they had built the store that I said GameStop should have. And I was like, wow, one of the biggest corporations in the world is using my idea. I wonder if I should check to see if I should get a fee for that. I had a lot of good ideas that I didn't get paid for, including one that helped somebody build a multi-billion-dollar financial firm. So this is GameStop. What is the mathematics that allows that to happen? Is there really that many people who just suddenly believe that GameStop is the greatest company in the world and GameStop is actually making money now? No. Neither one of those things. GameStop is losing money. Now, I will say, as an aside, they're going to close all those stores, I think, because they're all the leases are coming up. So we'll see what they do. Because this new activist investor, the Chewy dude, he's saying all the same things that I said a few years ago. So maybe GameStop ends up doing everything that I said and it becomes a profitable company. Can it become profitable enough to be a $200, $300, $400, or $500 stock? I don't know what the price is right now. It's been all of those things this week. No, probably can't. I think a best case scenario, it's an $80 stock. I think the reality is it's probably a $30 or $40 stock based on the fundamentals of the company. Now, they can keep trading this, but now that the jig is up on margin, right, the brokerages are allowing trading, but they're tightening the screws on the margin requirements, which were 30%, which is insanely low. Should be at least 50%. And honestly, I don't think you should be allowed to use margin unless you already have a net worth that's high enough. Unless you're an accredited investor, I don't think you should be allowed to use margin. Why? Because margin is really there to help you leverage your assets. It's not there to help you gamble, build your wealth through work or smart long-term investing or inheritance like 2/3 of the rich people. Just wait for dad to die. Or granddad or something. I don't know. Whatever you got to do, millennials. Break the law, whatever. Go down to Fifth Avenue, storm the White House, Capitol, wherever it was. Who cares anymore? Well, I say it like that because the millennials, and if you read the post, are saying they're screwing us for jamming it to the hedge funds and the institutions. Well, kind of. The brokerages can go out of business from this. It's happened before. The brokerages have to protect themselves. If the clearing corp tells them, hey, you have to have more money or you have to stop allowing so many of these trades, there's some combination of those things that has to happen. Because this chart is not the way markets are supposed to work. Now, this can happen when a small company discovers a blockbuster drug, or when a small company suddenly has a product that everybody wants, or a subscription revenue service suddenly gets tons and tons of subscriptions. That can happen. It's not supposed to happen just because one group of gamblers beats another group of gamblers. It's not how it's supposed to work. And now, guys like Andrew Leff from Citron Research are getting death threats. And I don't know if he's a piece of shit or not. I'm not positive. He might be. But should he get death threats for playing within the rules? Or should these people be booted out of the office so the rules aren't all screwed up? Andrew Leff, by the way, is one that I had a semi-famous dispute with over Exact Sciences. He was shorting Exact Sciences, and I just wrote in an article, Citron Research is wrong, here's why. At the time, Exact Sciences was $20, $30 a share, whatever it was, and now it's $140. And it took years. When I bought Exact Sciences under $10 a share, I said it's going to go to 100 and might go to 200. The easy money is into the 60s, 70s, and 80s. Well, so I sold. When it got to the 60s, 70s, and 80s, I sold it because that was easy money. And it still went up, and people say, you're dumb, you should have kept holding it. Yeah, but I moved on to something else that had easy money. When the easy money is made, when the market finally recognizes that your thesis was right, when the market gets serious about something that you're investing in, then you can take some liberty. What? It sounds like he's talking in code. And you can build a fortress, get on the phone. What the hell's he talking about? In any case, if you're a member, you know what I'm talking about. GameStop's going to plunge. It's going to get down under $100 a share. And where under 100, I'm not exactly sure. But it's going. AMC Entertainment. People want to say, hey, they're just beat up because of the pandemic. Oh, really? Notice that says 2017 right there. AMC has been on a perpetual downtrend. Wasn't even that bad here. I mean, it was at 8. It went down, the 3. Yeah, it was at 34 a couple of years ago. 34 to 8, that's a 75% drop. 8 to 3, it's about a 60% drop. Seems like that's just a continuation of the trend. Well, look at this. From 2-something to 13, up 600%. Why? Because people were shorting AMC based on it going bankrupt. AMC took out a loan, got more backers. I don't know why. I don't know why anybody would invest in AMC. The only way to buy AMC, in my opinion, is to buy them out of bankruptcy. Or if some theaters go dark, that might be what I buy. Just buy a theater, do something different with it. But this stock goes up 600% in a couple of weeks. Why? It's because the math allows it to happen. That's all. And going back to that whole gambling system, there's just a certain number of shares available to buy and sell, right? So if you use margin, you can actually buy or sell more shares than exist. GameStop was shorted at 130%. In my opinion, that shouldn't be illegal. And that has to do with the margin requirements, which have been relaxed in the last 4 years, being stupid. The financial regulation industry was run by the financial people. Now, they claim that it's Congress, but the financial people buy enough Congress people to get what they want. That's why you need career public servants who aren't political. That's why you need people with not ideology, but ideals in the government as career civil servants. At some level, the bureaucracy, as long as it doesn't get too fat, doesn't encourage fiefdoms, which is a constant challenge, is good. It's supposed to be there not as some sort of communist thing or socialist thing to give everybody everything, but to ensure safety on many, many different levels and fairness, a level playing field, so that we can pursue life, liberty, and happiness. So there's not some oppressive, feudal stealth system that oppresses us. It's not the deep state that oppresses us. It is the bought and paid for assholes that we emotionally elect to office to represent us, and knowing in the back of our head that half of them don't, maybe more than half. I don't know. I would like to be able to vote Republican once in a while. And what I've seen in 40 years, it's become less and less likely. And remember, I've worked for a Republican presidential candidate. Why did that stock go up? AMC. It's the math. They just overwhelmed the system. They used calls and margin to create more buy orders than there were sell orders. And thousands of small investors were able to overwhelm a handful of giant investors. I had a friend text me the other night, what the hell is going on with GameStop? And I said, they're messing with it because they were able to buy more shares than were shorted, and everybody's using leverage, and it's going to, crash at some point. He goes, should I sell it? I go, what do you mean? Yeah, I bought it back at like $14 a share back when you said to buy it, and I never got around to selling it. And I was like, dude, 1 minute after the market opens, sell it. You got $297 a share. Now, the bid ask was $315 to $320, a $5 spread. You put the order in at market and got $297. Why? Because there's not anybody really selling their shares because they don't really exist. They're all in margin accounts. They're all held by the market makers who had to balance their books because of all the calls, all the options. This is National Beverage. Now I get, and I push these charts back to 2018 because I think that's a pretty relevant time period. And I actually think 2015-16 is a relevant time period but maybe we've printed too much money to go that far back in time. But we can for sure go back in time far enough to replicate 2018 in a lot of places. So this company had been losing money way before the pandemic, and actually somehow started to do better with the pandemic. I don't really know the fundamentals. I don't know why this happened. I don't know if this was always a short squeeze, but this for sure was. Stock's not going to stay up there. It's going to come back to around 100. And if the millennials pile on to the short side, which is what I warned about in that article back in September, October, that they just flipped a switch from going all long to going all short and using the Reddit message boards to do that, to coordinate that, to collude there, which is what it is. It's collusion. It's market manipulation. I think the regulators are paying attention now because some big guys got hurt. If it was only little people getting hurt, people like us getting hurt, right? And I got my ass kicked on those oil trades a while back because the millennials started betting on oil stocks going up. I didn't think the millennials would bet on the oil stocks going up, but they did. And that's how I lost. I went from a trade that was up in 4 days down 50%, right? The trade was up the first 2 days, and 4 days later it was down 50%, right? And I had somebody read me the riot act about that. How come everybody else made money? Well, everybody else is a pretty strong statement. That's like saying forever. You notice I use the word forever in many of my articles. Why do you think I use the word forever? Do you think I don't know that nothing's forever other than death and taxes? Or do you think I have another reason to use the word forever when I say the slow growth forever economy? When I say that oil prices will be low forever? Do you think it is that I don't know what the word forever means? I don't know. Maybe I forgot. So this is going to come way down. This is Bed Bath & Beyond. When was the last time you were in Bed Bath & Beyond? Now, I will say they've been working on improving themselves, right? Here's a chart that you can look at and go, oh, and I'm going to use the Reddit term. On Reddit, they call this a shit stock. So they did. It's not a joke. That was really what they called it. And then it got beat up here, and it started to grow as the short interest went up, and then bam. So the millennials are emboldened. All these new traders are emboldened because they think they're brilliant. What if I told you about my poker experience? That the millennials studied it like it was a class, employed all the proper techniques, and they won for a while. Well, anybody who uses a system, eventually the system stops working. Why? Because your competition adjusts or nature adjusts. Like in the case of climate change, nature is adjusting. So no system works forever. In poker, you just find a different way to exploit people. And for me, I've become pretty good at getting under people's skin. I know you can't believe that. And manipulating them psychologically and emotionally. And only the very best players don't fall for it. And I've gotten so good at it that even the good players fall for it sometimes. They'll make a play because I have them dizzy. And that's a phrase from my great uncle, who's 86 now, who still plays poker, been playing since the 40s. He said, look, you play your hands this way, in this asymmetric approach, and you'll make them dizzy. And they can't apply the system to you, and you'll beat them. Just make a couple of good laydowns and wait for them to bet into your monster. Well, that's what's coming right now. There's a monster coming for a lot of these millennials. And right now, they're triggered. I saw that on the chat. I saw that. Tangier. This is a mall company that makes their money on people traveling and stopping at the mall. That's what Tangier is, factory outlet. I've stopped at a bunch of them going from my place to the East Coast. Who's driving around right now? That's right. This company is running out of money. But the stock up 400%. You know, I mean, it's right back to where it was before the pandemic. So a year of not making any money, and their stock's not down. Remember what I said? This is a year of sell the news. It's about to become that because we just found out that we'll be lucky to have 100 million people inoculated by summer. And the entire population probably isn't inoculated this year. There's just not enough vaccine. There will be by next year. We'll probably have half to 2/3 of the population inoculated this year. We're going to end up letting the kids have coronavirus again. And I agree the kids should be in school, but at the same time, they and their teachers should be safe. So how do we handle this whole situation? Well, the answer is you bid up stocks. That fixes everything. This is Masterich. I bring this one up because we've talked about it recently. And I actually liked this trend line here. And the idea that you could buy it here under 10, and over a couple of years, it would break back up above this trend line. So this trend line is it's based on this trading activity over here. So I don't know I think this was just a acceleration of a timeline that it should have gotten to this price level over here somewhere. I suspect that it comes back and you get another chance to buy Maastricht. And time should heal that company, but you have to look at their balance sheet, figure out how much time, and it's probably more than people expect. And if it's more than people expect, they'll get impatient and they'll sell. So this one could definitely chop for quite a long time. Here's Sunpower. This has a bunch of things going for it, right? We were buying it down in here, and now it's up here. I wrote that article this week. You really ought to be trimming it. Sell your entire profit. So if your cost basis is 10 and you can get out at 50, that means 10 to 50, right? That means 80% you got to sell. Keep your original investment in there, but sell the entire profit. Interestingly, I got fired by some kid, some millennial. Actually, he's borderline millennial Xer. He acts like a millennial. And anyway, he fired me because I'm obsolete. And he made me sell this stock down in here. Well, then he says, have you even heard of Enphase? Because he told me how good he was doing with his trades. Two things. One, he said to me, have you ever even heard of Enphase? I'm the guy that was buying it in the single digits 4 or 5 years ago. I've written an article about it every year. When it got to 40, I said the easy money's been made. And the easy money was made. The stock's not worth $200 a share if you're valuing it based on what the company earns. Now, it got that high on momentum and call options and margin. But you notice, we talk about the confluence of different levels. There's massive support in here, even all the way to about 70. There's some sort of support around 90-ish, 90 to 100. This is all air. Enphase can get down to 100 really fast, especially if margin requirements are tweaked up even a little bit, from 30 to 50%. If margin requirements go from 30 to 50%, which is historically where they've been, 50%, stock gets crushed. And people talk about ETF orders. That's more natural, though. It's still just unleveraged money. That's basic supply and demand. This is creating artificial supply and demand. Eventually, the artificial has to dissipate in all things. So Enphase will get down to around 100, and we're going to have to make an executive decision. Do we think that this area here is the new support? And we're going to have to study the fundamentals. And when it's falling, we're going to have to ask ourselves, is it going to fall further below what it's really worth? Right now, it's probably double or triple, trading for double or triple what it's truly worth based on earnings. And we have to decide if it's double or triple. Because if it's double, that means that it should be trading for around 100 if we're going to do it on valuations, corporate earnings. So when it gets down to 100, do we buy it or do we measure our technical indicators and see, is it going to overshoot? Because if we can buy the $100 company for a stock price of 70, that's better than buying it at 100, right? Lowest cost basis wins. Somebody asked about silver on the chat room, in the chat room. Somebody also emailed me. But if you have a question, ask on the chat so everybody can see it. All right, let's create a discussion. Well, they said, is short going to squeeze up? Well, I kind of did, didn't it? It's already happened. Is it going to squeeze up more from here? Maybe a little. But who really benefits from the price of silver and gold in these higher ranges? Just want to throw some alligator jaws in there. This is the Fed balance sheet divided by the S&P 500 and the S&P 500. Alligator jaws create big corrections, right? Big corrections. Doesn't always look that big, but this is still 20%. Are you hearing me? This is the way I have spoken. This is the simple way to balance your portfolio. And who benefits from the gold stock, from the gold and the silver being more expensive? The gold miners. So here's your ETF of the week. The Gold Miners Trust has come off its high. It's gotten into the kind of the undecided area of the buy zone, right? This is the primary area. The orange box is what I'm anticipating. It's where I want to buy it. If you're more aggressive, you can buy it up here. And if you're a super scaredy cat, you can wait for it to get down here. This might not happen. This might not happen. This is happening now. But I think this will probably happen, and this could happen. You're probably going to see the gold miners get back into this area. It bounced off of these levels right here, right? See this? It got down and bounced off. I think it's going to get down here and bounce off again. So I think I'm probably a buyer of GDX at 33. Now, it's already 12% of my portfolios. Remember, I took some profits from 16%. It had grown to 30%, and I brought it back down to 12%. So if I'm a new investor, or I want to ramp this up to 12 to 16%, And the reason I'm at 12 is because I own one of the stocks individually that's in this fund. And I might buy one or two more miners separately because I like the fundamental stories. But 12 to 16% in gold miners. Why? Because they get other minerals too. They get silver, they get copper, all good things. But it's a correlation story. It's far less correlated to the S&P 500 than most other stocks or ETFs. And while you would normally want to have about 20% of your portfolio in some sort of fixed income, usually global, rather than having 100% in stocks. Why? Because long term, over very long periods of time, 80% stocks and 20% global fixed income has done as well as 100% stocks because the volatility profile is lower, right? The algebraic equation just works out a little bit better in your favor with less volatility. And if you're a retiree, the idea was always move to about a 60-40 portfolio, 60% equities and 40% global fixed income. Well, with a big slug of that being U.S. Treasuries. Well, the problem with that is that global fixed income, United States everywhere, interest rates are down near 0, 1%, 2% if you've got a really long bond. But what happens to all those bonds when they finally do helicopter, which is it's an inevitability. It's an inevitability. It's just a matter of, does it happen next week overnight, or is it 7 years from now or 10 years from now? I don't know. But if you're buying 20 or 30-year bonds to get that 2% and interest rates jump up to 4%, you lose a lot of money unless you hold the maturity collecting 2% when everybody else is getting 4%. Long bonds, as Jamie Dimon said a couple of weeks ago, maybe a couple of months ago now, I won't touch them with a 10-foot pole. So if you can't really use fixed income in your portfolio, except in some very select cases where you actually pick out the securities, and I've added some of that, to margin of safety and fundamental trends. Those will be in the very short list. What do? You look for different ways to have non-correlated assets. So it's not that you want 20% equity and 20% fixed income, or 60% equity and 40% fixed income. It's you want 60 or 80% equities, and then 20 to 40% non-correlated other stuff. It's not about the bonds. It's about the lower correlations, and gold stocks have lower correlations. So if you're a millennial or an Xer or boomer and you have a long-term outlook, enough assets that you don't have to be in bonds, go 80% equity and some teen percentage in the gold miners, because that'll be your 20% that's got less correlation, and it's a hedge against inflation, and it's a hedge against high volatility. Another one of the non-correlated assets is Bitcoin. But the rally that it's had has drawn attention too, which means regulation. Pretty sure Janet Yellen and the SEC are going to tell all the people who deal in Bitcoin it has to be regulated like a commodity, which means you're going to have to trade futures to get it into the banking system. How many of you have traded futures? They can kill Bitcoin really quick. They can. They can turn it into an asset that is strictly an inflation hedge by regulating it like a commodity. Because it's never, ever, ever going to be a currency. How do I know that? Office of the Comptroller of Currencies said under Trump about a month ago, only stable coins in the cryptocurrency world, only stable coins, got to be perfectly correlated to a particular currency, are allowed in the financial system. So what are your other non-correlated assets to the stock market? To an extent, real estate. It's still pretty correlated to the stock market, but not as much as an S&P 500 stock. So when I put up the correlations, I pull those charts right out of Stock Rover. I mean, those charts that you can see in Stock Rover, it's not just the screening, which is super easy to use and allows you to do different groupings and track your portfolio and everything else the Stock Rover does that is worth $20 a month or whatever it is. If you're really serious about investing, that wasn't an advertisement. I just get paid to say that. Those correlation charts should be hugely helpful to you. So that's all, folks. All right, I'm going to prepare this tonight or tomorrow morning and get it on the internet. And now I'm going to go babysit the Hulk. Have a great day.